Dear finance professionals and students, welcome to podcast of Fca Deepak Rao, a practicing chartered accountant. Daily news and updates for 23rd July 2026. Adani Group seeks to dilute a clause preventing airport operators from holding airline stakes. This change would enable the conglomerate to launch its own airline operations. The government is consulting legal experts on amending the existing airport privatization agreements. Such a move could introduce competition into the domestic aviation market. However, rivals anticipate strong opposition and regulatory scrutiny over potential advantages. Mauritius cabinet ratified a tax protocol granting Indian officials more questioning powers. This allows direct challenges to offshore entities suspected of tax evasion. The principal purpose test will deny treaty benefits if tax avoidance is a primary aim. This change follows the Tiger Global verdict and strengthens genuine substance requirements. The protocol aims to ensure treaty benefits are for legitimate commercial purposes. Indian banks are identifying 25 original equipment manufacturers for AI risk mitigation partnerships. A working group is developing a framework to identify and strengthen safeguards against cyber attacks. Banks will reduce network attack surface area by deploying defensive AI agents. Internal controls may not prevent exposure through weak vendors or third-party components. Vulnerabilities in embedded code can spread flaws across multiple financial institutions. Amazon cut jobs in its Artificial General Intelligence or AGI division as the technology giant continues to reshape its artificial intelligence business. The layoffs come months after the company eliminated about 16,000 jobs across different teams in January. Amazon said the move is part of its strategy to prioritize projects that will deliver the greatest value to customers. The company stated that artificial intelligence remains one of its biggest long-term priorities despite the job cuts. The new liquidity coverage ratio or LCR norms that took effect in April have helped banks improve their ratio as well as freed up liquidity to support credit growth at a time when deposit growth is lagging. Under the revised norms, deposits from non-financial entities such as trusts, educational, charitable and religious, partnerships and limited liability partnerships now carry a lower runoff factor of 40% compared with 100% earlier. The runoff factor indicates the likelihood of deposits being withdrawn from a bank. A higher runoff factor requires banks to hold more high-quality liquid assets or HQLA, mainly government securities that can be quickly liquidated during periods of financial stress. The lower requirement has allowed banks to deploy some of the freed-up funds for credit growth. The Indian rupee is expected to remain under pressure through Thursday's session as the worsening US-Iran dispute fuels a further rally in oil prices. The rupee is expected to trade in a 96.5 to 96.7 range with risks tilted to the downside, although support from the Reserve Bank of India is likely to limit losses. The rupee has been under sustained pressure since tensions between the US and Iran flared up again, triggering a fresh rally in oil prices. The currency had fought slight respite from robust foreign inflows linked to the Reserve Bank of India's recent measures, which traders said helped reduce the risk of a bigger depreciation. However, with oil prices continuing to climb, the currency of the world's third largest oil importer is unlikely to find much relief.
This podcast is sponsored by Sound of CA. We share because we care. Vande Mataram, Jai Hind.